The music stopped, and suddenly, the financial markets forgot how to dance. After months of unstoppable gains, this week everything flipped. AI stocks crashing, Washington melting down, investors panicking. So what the hell just happened? Why did confidence vanish overnight? And is this the start of something much bigger? Or just a badly timed hangover from the party? If you're new to finance, the explainer starts right after this short. Stay tuned. Otherwise, jump straight to the podcast link in the description for deeper insights and the full global breakdown. Don't forget to like, share, and subscribe, because next week's story could flip the market all over again.
Well, it looks like the party might be over. After what's been a fantastic run for most of the year, global markets just slammed on the brakes this past week. And the big question on everyone's mind is, why? What happened? So we're going to break down exactly what went on, why the mood soured so quickly, and what you need to watch for next. Okay, let's get right into it. For weeks, it felt like the market could only go up, right? Well, that rally that pretty much defined 2025 just came to a screeching halt. And this wasn't just some minor dip. We're talking about a serious global pullback that really caught a lot of people off guard. So let's unpack the exact reasons behind this sudden and pretty dramatic shift.
You know, to really get what went wrong, you have to look at the big picture. This wasn't just one single event. It was more like a perfect storm of concerns that all hit at the exact same time, spooking investors everywhere from New York all the way to Tokyo.
So it really boils down to three main things. First, after that massive run-up, investors started getting really nervous that the AI stock boom had maybe gotten a little ahead of itself. Second, the US government shutdown just kept dragging on, creating a ton of uncertainty. And third, we started to see new data that showed some pretty clear signs of economic fatigue. Now let's see how these three forces played out across the globe, region by region.
Now, what's really interesting is that even though these were global headaches, they didn't hit everywhere the same way. Different countries and regions felt the pressure in very different ways. And we're going to start right at the epicenter of the sell-off, the United States.
So, the 3-week winning streak in the US? It's over. But the real story here is the Nasdaq. It dropped a full 3%. I mean, it got hit the hardest by far. And why? Well, it's packed with all those AI and tech stocks where investors suddenly decided it was time to take some profits off the table. This is a perfect example of those valuation fears turning into actual real-world losses. On top of all that, you had the political chaos brewing in Washington, and it was starting to have some very real consequences. The shutdown officially became the longest in U.S. history. This didn't just delay important economic reports we all rely on, but it also led to actual disruptions, like the FAA ordering flight reductions. That's the kind of dysfunction that just shreds investor confidence.
And then, the economic data we did manage to get? Oof, it was not encouraging. October layoffs surged to their highest level for that month in over 2 decades. At the same time, private companies added a really paltry 42,000 jobs. This is a big deal because that strong, resilient labor market has been propping up the economy for so long, and now it's finally showing some serious cracks.
And of course, that weakness in the job market has a direct psychological impact on everybody. The main consumer sentiment index just plunged to 50.3. That is its lowest point since the middle of 2022. And the report was crystal clear about why: the government shutdown and growing worries people have about their own personal finances.
But, you know, it wasn't all bad news. There was one pretty significant silver lining here that actually kept the market from falling even further, and that was corporate earnings. They were surprisingly strong. In fact, 82% of companies beat their profit estimates. That's the highest beat rate we've seen in 4 years, and it provided a much-needed cushion for the market.
Okay, so if we look abroad, we see a pretty similar story, but with a few unique regional twists. Europe fell as worries about Germany's weak manufacturing sector got worse. Japan's Nikkei got hit even harder than the Nasdaq, falling over 4% as its own AI stock frenzy came to a really dramatic halt. But look at China. It totally bucked the global trend and actually finished in the green. And that was thanks to a surprise 1-year tariff truce with the US that gave investors a rare bit of good news. So, that's the lay of the land. Now let's pivot and look at what could be coming next. The market is definitely in a fragile state, and investors are watching 5 major risks that could really pull it in either direction in the coming week. So here's what's on everyone's radar. First, how much more economic damage is that US shutdown going to cause? Second, is the AI sell-off just a healthy correction, or is it the start of a much bigger downturn?
Third, are we heading for stagflation light? You know, that nasty scenario of sticky inflation and weak growth that central banks absolutely dread. Fourth, can Europe's economy manage to avoid a recession? And finally, will China's diplomatic win actually be backed up by real improvement in its economic data? Each one of these is a major wildcard.
Okay, we've covered a lot of ground, so let's try to distill this really turbulent week down to the single most important takeaway for investors.
This quote, I think, perfectly captures the shift in market psychology. For months, the market story was all about AI-fueled growth and technology. Now that focus has completely changed. The biggest worries are about potential policy mistakes, from politicians in Washington and from central banks all around the world.
Yeah, that relentless optimism that really defined the market for so long, it seems to be over, at least for now. The easy gains feel like they're gone, volatility is back, and investors are finally starting to ask much harder questions about whether this year's rally can actually last.
Which leaves us with this final critical question. Was this past week just a healthy pullback, or is the great bull market of 2025 finally running out of steam? How those 5 risks we just talked about play out will give us the answer very, very soon. We'll be here to break it all down for you. Thanks for joining us.
If you found this breakdown useful, hit like and share it. It helps more people discover MacroNav. And if you want more clear, no-nonsense explainers on global macro and finance, make sure you're subscribed. Stay ahead, stay informed.